is an IUL tax-free? If you've been doing some research on how to build wealth tax-free or retire tax-free, you've undoubtedly come across an account called an IUL. Now, it might sound a little bit more appealing than a Roth IRA because there's less rules and less restrictions, but how does that actually work? Well, an IUL is just a form of permanent life insurance that grows a cash value component behind the life insurance that actually grows tax deferred. Now, it's appealing because it grows mirroring a stock market index, just like what an Roth IRA would essentially be doing, but without the risk. So you can see it do rates of return like 8, 9, 10, 15, 20% or more in a given year. But how do you access that tax-free, given that it grows tax deferred? Well, there's two ways to access the money out of the cash value component of your IUL, and only one of those is tax-free. The first way you can access money out of the cash value component of your IUL is just simply by withdrawing it. Now, you can always withdraw the money that you put into the IUL tax-free because we call that your cost basis, but the interest, that's where you always get got, right? In any investment, including an IUL, which is not an investment, but anywhere you have interest being earned, if you withdraw it, it's going to be taxable, right? That's where a taxable event gets created. That's what we don't want to happen. The other way you can access money out of your IUL is through policy loans. And this is the secret sauce because loans, my friends, loans are not considered taxable income by the IRS. Think about it. When you borrowed money out to go and buy that new car or to pay for college or to buy that new home, were you taxed on any of the money that you borrowed in any of those situations? No, right? Because loans aren't considered taxable income. And it doesn't work any different with an IUL. And with an IUL, you have two options for how you can borrow money out of your cash value. The first option is just a standard loan. This will actually remove the loan or the dollar amount that you're borrowing out from your cash value. Typically, it's free to do this. Usually we call it a zero wash loan where the insurance company might charge you 5% but recredit you 5% at the end of the year. So it's basically a free way to get access to your money tax-free. The second option is called an alternative or a variable loan, where now you're actually not depleting your account value, you're actually borrowing against it. And the insurance company uses your money as collateral. They loan you their money. Your money stays inside of your account, growing, compounding, earning interest. Now they will charge you an interest rate to do this, possibly 5%. But if you are earning 10 minus 5 means you netted 5+ positive percent interest on money that doesn't technically exist. It's actually quite amazing that insurance companies even offer this feature to individuals. The only other comparable option that exists similar to this today would be, for example, borrowing on margin, which means you'd have to have at least probably 3 to 5 million or more in net worth in a stock or an investment portfolio for the investment company to allow you to borrow against it instead of depleting your cash. The other option would simply be something like a HELOC, where if you own a house, you can actually borrow money out of your house to go and invest into another property or to go and invest into another asset or anything else that you would like. I actually think it's pretty amazing that insurance companies are bringing the strategy of leveraging OPM, other people's money, to middle-class America, where this was previously a strategy that was only reserved for the ultra-rich. So as you can see, friends, the ability to access money out of your IUL tax-free is not a scam. The insurance companies are literally using the exact same strategies that investment companies and real estate companies have been using for decades. So if you like this video, make sure you subscribe so you don't miss another video similar to it here on my channel. If you want to learn anything more about IULs, I've linked 2 videos here to walk you through it, and I will catch you back here next week on YouTube.